What's up, chat? So I just want to do a breakdown over the 2026 trade on NASDAQ because on both days we've been ranging down and a lot of people are saying, oh, they can't get into trades. I want to show y'all how to trade range trades, okay? So let's go back to it. We actually took this trade on our prop firm accounts and we made about 1,300 on one account. We made, I think, like 400 on another one, then we made like 600 on another one. Mind you, this is eval accounts. We're just getting funded, but I'm trading like 3 different eval accounts, okay? So when you come into the market, on yesterday, February 26th, so boom, we had a huge boom down, right? And this is what I want to show y'all, right? This is why the reasons to me fair value gaps are so important. Fair value gaps are super important to me for this reason right here. Here, let me make this bigger, bro, for y'all. Y'all can see what's going on. So this is the reason why fair value gaps are important. So boom, we created 2 fair value gaps, right? We have this fair value gap right here that was created. And we have this value gap right here that was created. And this is what I'm going to tell you about days where like the market just goes in one direction. Understand this. When you see a reversal on the charts, right? When you see a reversal on the charts, the market very rarely, in all the years I've been trading, goes here and then will go all the way back up here. That's not happening. Understand this. The market just can't go down because if it goes down, it has no place to come back and get money. So when the market goes down in a big wave like this, it has to come back into something. And I saw somebody yesterday saying that if you look at my chart on Wednesday, the market did the same thing, but it just went up in the buy direction. Then it came back into a fair value gap and boomed up. And I saw somebody comment, oh, he got it with no confluence. The fair value gap is the confluence. If you see the market going up, and then one candle taps into a fair value gap and closes outside that fair value gap, that's a confluence, okay? And let me show you exactly what happened. So boom, we come up. Mind you, we break this 15-minute fair value gap, okay? And I had a feeling we were going to break this gap because we got too far deep into it. And then the only other fair value gaps is either all the way up here or all the way up here. And the market's not coming all the way up there unless it wants to reverse. And the market does not reverse usually in one day. So watch this. Boom, boom, boom. We break this fair value gap. But boom, hold up, I'm sorry. But we tap into this one. So we tap into this fair value gap, and then the candle closes outside that fair value gap. That's where I took my entry. I took my entry, right? And mind you, I took my entry right here. And mind you, I don't aim for the bottom of candles when we do reversals like this because you don't know if it's going to go all the way to the bottom. I aim for the bodies. So boom, that's the bodies right there, right? So you aim for the bodies right there. And then we drop down to our 5-minute. Okay? I want to drop down to my 5-minute and see something. What fair value gaps do we have in the 5-minute? Because that's probably where I want to place my stop just in case things get rocky around that area. So boom, I look at the 5-minute. It's a bullish fair value gap right here. So I really want to see us invert this gap, right? Right here, there's really no gaps that need to be inverted. So we're good in that front. But okay, so boom, we tap into that fair value gap, and now what do we see? We want to see price drop down, and what does price do? Drops. In this gap right here, see how I had a little reaction in that gap, and I was in this trade. This happened a while. Look, it comes back down, has a little reaction, another reaction. But what is this reaction right here? This is what I want to show y'all. This is what I want to tell y'all when y'all liquidity. Because mind you, it's people trailing their stop. So I had my stop trail to about right here, right? This right here took a lot of people out. Because right here, this is liquidity. So boom, it came up, took everybody out right here, and then what happened? It boomed down. Easy money. That's easy money. That's easy money, chat. Easy money. On days where we range, a fair value gap is confluence. Because if you look right here, if you look over here in this section, right, on this 15-minute, nothing. When we were reversing up or blah blah blah, nothing broke these. If we never come back below these candles. So look right here. I don't want to get y'all confused. So when we were reversing up, right, if you look at the 15-minute chart, we're just going straight up. Nothing. This doesn't break this candle though. We don't break this green candle up. Whoops, sorry. Let me put this over a little more. We don't break this green candle up. We don't break this green candle up. We don't break this green candle up. See what I'm saying? And then what happens? When we tap into the fair value gap right here, now automatically we could be close. We have a different form of price. Now the candle closes in the middle, and then what happens right after? Boom, we drop down. You could have even seen that this candle was the first candle to break the low, got in right here, Got in right here. You didn't have to get in up here. Got in right here. And then put your TP. Nah. I'm not going to tell you how to do that shit. Because that's terrible risk to reward. No, forget that. I'm not going to tell you how to do that risk. But that's what I'm saying, though. But I knew this. When I was on the charts, I'm telling my homie, I'm like, look, bro, I'm going to wait for this. I'm going to wait for it to reverse because it has to. Tap into these one of these untested 15-minute fair value gaps. And when I see a good reaction, we're going to go lower. And what happens? That's exactly what it does. And I'm going to aim for these bodies. Trey, why do you only aim for the bodies? Because understand, I didn't know if it was going to go all the way to these lows. And watch what it does. We tap the bodies, which is right here. We tap the body. Right? We tap the body, which is right here. And we get out. Yeah, we missed some points right here, but watch what happens as soon as it taps the body. We go up. We go up. But I mean, but we go up for the rest of the day. So that's the trade that could have been taken. And it's the same. If you go look at my last video, when I did it on Wednesday, 2/25/2026, I did the same thing. We boom up for a little bit. Where is it? Let me see if I can find it. Hold up. I'm gonna show y'all a little recap. Friday, Wednesday, here. Look. So this is 7:15. Boom, this was the 7:30. We have two fair value gaps that was created, right? Two fair value gaps that was created. Two fair value gaps right here. What happens? It breaks past this fair value gap, but taps into the second fair value gap. That's the same thing that happened over here, but it was opposite. Look, it's the same thing that happened over here. It was opposite. Look right here. We come to this we boom up at 7:30. It comes back, taps into this fair value gap. It creates two fair value gaps. This one right here first. It respects that actually. It actually didn't close outside of it, but then it taps into the other one as well. Then boom, we go up. You could have aimed for the bodies right here, or you could have just done the 5-minute trail. And what happens over here? Same thing. Look, same thing. We boom down at 7:30, right? We come up. We come up. We don't break this fair value gap, but we tap into the second fair value gap right here. Then what happens? We come back down a little bit. Same thing. It's the same thing. The reason I tell y'all to use fair value gaps because it keeps happening. It's a repeat effect. That's why I use fair value gaps in my IZC confluence, because fair value gaps work. It's going to recollect money, then going back to where it needs to be. So that's what I'm here to tell y'all. This is why I use fair value gaps, because they work on me. And you'll see the market tends to repeat itself on my soul.